Good morning, I'm Trinity Chavez. It is Leap Day and February 29th, and you are watching NYSE TV Live. We are coming to you from the epicenter of global financial markets, and it is a very busy morning here at the NYSE. All eyes will be on Timberland Real Estate Investment Trust platform Rayonier, which will be ringing the opening bell in just about a half an hour. We will be taking you through the bell ringing and the play-by-play of that, and the company, which trades on the NYSE under ticker symbol RYN, is celebrating its 2024 Investor Day and its 30th listing anniversary. Elsewhere, one ETF that trades on the NYSE, ARCA, is giving investors exposure to the music industry. Its CEO will tell me more about it. And the exchange is also celebrating its 2024 Happens Here campaign and the 400th Inside the Ice House podcast. The exchange's head of marketing, Sarah Murphy, and head of corporate affairs will join me to dive deep into these exciting topics. Let's kick things off with the company ringing the opening bell this morning, which is Rayonier. The company, which grows renewable forest products and provides land-based solutions to support the transition to a low-carbon economy, says it's on a mission to celebrate industry-leading returns for investors through sustainable management of forests. The company has assets in what it considers some of the most productive softwood timber growing regions in 10 U.S. states in New Zealand. Most of Rayonier's roughly 2.7 million acres of assets are located in the southwest United States, and the company also owns more than 400 acres of land in both the Pacific Northwest and New Zealand. Rayonier is establishing itself in New Zealand in 1988. Not only is it rich in timber, but Rayonier invented its its close proximity to Asian markets where demand for timber was high. More than 2.2 million acres of Rayonier's land in the U.S. is accessible to the public in the way it trails, hunting, and recreation. But these lands aren't only for hunters, fishermen, and other nature lovers. It's also about business. And each region that Rayonier operates in, it's responsible for different things. In the southern U.S., Rayonier grows forests that are primarily used for pulpwood and saw timber. Lumber production is also expected to grow significantly over the next few years in this region. Now, in the Pacific Northwest, Rayonier's forests grow products that are primarily used for a variety of construction purposes. And in New Zealand, Rayonier's softwood plantation productivity thrives due to a strong biological growth in the region. Now, the company was founded nearly a century ago, in 1926 to be exact, and has a long history with the New York Stock Exchange. Rayonier's first listed here back in 1937 and continued trading until 1968, when it became a wholly known subsidiary of manufacturing company ITT, operating as ITT Rayoniers Incorporated. Fast forward to early 1994, when Rayonier spun off from ITT and listed on the exchange for a second time. At the time of 1994 listings, Rayonier owned, leased, and controlled 1.5 million acres of timberland in the United States and New Zealand. Meanwhile, here at the NYSC, it has launched a new campaign that uses its own imagery captured at the more than 3,000 events that happened in the building since last year to convey energy, emotion, and diversity of the companies, peoples, and organizations that used our building and our brand to amplify their own messages. From superstar athletes and global leaders to C-suite executives from our 2,400 listed companies here at the NYSC, 2024 happens here.
Iconic brands speak for themselves. The strongest brands stand the test of time. We are so excited to welcome you to our community. Today is all about you.
We've never lost sight of what we're trying to do and deliver that mission.
Going through this experience with my partners and my families has been unbelievable.
We imagined something that didn't exist yet, and we believed that we could do it.
You're going to look back on this accomplishment as one of the finest you've ever done.
I want you to know that the best is yet to come.
Just a few minutes, we'll go downstairs to the legendary New York Stock Exchange trading floor to ring the opening bell. The history here, the tradition, it's just incredible for us to be at this moment.
Joining me now is the head of the exchanges, Sarah Murphy. She's the head of marketing here at the New York Stock Exchange, to talk more about this campaign. Now, tell me more about how this campaign got started, Sarah.
Well, I think if you think about the video that you just saw, you can kind of see why we went in this direction. Mm-hmm. We have always welcomed amazing companies to the New York Stock Exchange, both newly listed companies and companies that have been here for a long time, like Rayonier, who, mm-hmm. as you noted, is going to ring the bell later today. And I think, when we looked at all of that, we realized that it's so much more than just a place where people can come to raise capital. Mm-hmm. That is first and foremost our mission. But what we saw was that a lot of companies come in here to make other kinds of announcements, and then based on that, we saw increased demand from people outside the organization who weren't at listed companies, who wanted to come here anyway because it's a big stage that kind of magnifies their message. Yeah. So we wanted to take advantage of that and really showcase the amazing people and companies that come through the building. So that's how we got started.
Well, tell me about some of the biggest goals that you're focused on for 2024.
So really the goal is to raise awareness of exactly that. Like, I think people look at the outside of the New York Stock Exchange. The facade is one of the most recognized icons in terms of buildings in New York City. Mm-hmm. And I think there's a lot of curiosity about what goes on inside there. We're not open to the public, so it's a special experience to come inside. Mm-hmm. And what we wanted to do was show a little bit of what happens in here, out there. Yeah. And, we've gotten great response so far, so people really love seeing the excitement, to your point, yes. of what happens inside the building, and we just wanted to make a bigger deal out of that.
And what sort of social platforms have you been utilizing to really get the messaging out?
So we're on all of our organic social platforms. So our amazing social media manager has been helping us with that, but we've also done some paid promotion on LinkedIn and on Instagram, and that's really where we're pushing to get that message out there to our target audience.
And tell me about what the next phases are to growing this campaign.
So we started with a bang, right? We wanted to be on big platforms, so yes. we did social, as you and I just spoke about, but we also did a bunch of outdoor. So we did really nice, large outdoor placements in New York City mm-hmm. that are ongoing. Mm-hmm. But moving beyond that, we're going to work with some strategic media partners that I cannot yet name.
But you're going to come on NYSC TV Live
I'll be back.
You'll
I'll
make
be
the
back to
announcement
talk
here.
about that. But so we've chosen a couple of partners that we really want to push that message out with. So yes. we'll do things like newsletters and digital media and pre-roll. So lots of different platforms. We're going to double down on social. So we started there and we'll continue with that. Uh-huh. And I'm super excited to see that come together.
And I have to say, as I'm talking to you, your face really lights up when you're talking about this campaign.
Oh,
and you can tell that you're really passionate about what you do. I mean, what excites you most, about this role, and what keeps you up at night?
So I have been at the NYC for about 4 years. And I think what is exciting to me is the opportunity to come here every day and not know what kind of company I'm going to work with.
Yeah.
So I can come in one day and I'm talking to an online retailer. I can come in the next day and I'm talking to a huge enterprise tech company. And that really keeps you on your toes. So it's exciting, not unlike your job, right? Like you're going to interview different people from different companies.
Yes.
And it keeps it really interesting.
Yeah.
And I think that is really what keeps me coming in every day and staying excited about this role.
Yeah.
What keeps me up at night, I mean, other than my dogs who are relentless, I think it's really just thinking about my team. Yeah. How do I support them? How do I give them the space that they need to be creative, to get their jobs done? You know, you mentioned 3,000 events a year. It's a really busy time at the Exchange, and you know, my sort of reason for coming in is to help them really achieve their goals.
Yeah.
So that's kind of what can keep me up at night when I feel like that's getting out of hand.
I know, 3,000 events and over 2,400 listed
lot.
companies, and plus the companies that you say like obviously want to come and utilize our resources here at the Exchange. So I mean, there's a lot of things ahead for us. Well, thank you so much, Sarah, for joining me.
Thank you. It was a pleasure to be here.
Absolutely. Now, elsewhere inside the cradle of capitalism at the New York Stock Exchange, well, we just celebrated the 400th Inside the Ice House podcast here, and I spoke with its host, NYSE Head of Corporate Affairs, Josh King, about that milestone. Let's take a listen.
We were just sort of proving a concept back 6 years ago when I sat and across the table from Tom Farley, our NYSE president at the time, and Tom was a great talker. All I had to do was tee him up with a couple questions and he would go on and on and on. Finally, we found ourselves at the end of that hour having really told Tom's personal history, a little history of the New York Stock Exchange, and a little sense of what was going on at the exchange at the time. And from that point forward, that was episode 1, that was guest 1. Now we're on episode 400 and guest who knows what. And we have always been consistent to say we get the most interesting people here at the New York Stock Exchange, whether they're leaders, entrepreneurs, visionaries, politicians, activists, authors, storytellers. We just want to have a place where they can come in, a comfortable room like the library is, and let them tell us their story, because there aren't a lot of venues anymore where you can sit down for 45 to 60 minutes and have people like Lance Glynn and Pete Ash and me focus on what their stories are, their backgrounds are, and let them go deep into what they're trying to talk about.
And you know, you said it best. We've had celebrities, entrepreneurs, thought leaders enter the doors of the New York Stock Exchange telling their fascinating stories. Tell me about some of the most memorable moments or guests or stories that you've had the chance to tell.
It's hard, and I think about it a lot. But one thing I would say is that when I showed up to head communications at ICE and the New York Stock Exchange 6 years ago, I'd come from a period in politics and government, a period at the Hartford Financial Services Group, a period at Willis Group Holdings, a period at First Data, all those companies NYSE listed, by the way, and then came to the NYSE and was working for ICE. And I have to confess that up until that point, I didn't know a lot about other companies beside the one that I was working for. And the great privilege that I've had is to sit across the table from among the 2,400 New York Stock Exchange listed companies, 400 so far and counting of the most interesting people. And they've either just come into their jobs as CEO, they may have finished their jobs as CEO, they've graduated to executive chairman, they may have retired, they may have been a founder and now brought in a new management team like Brad Jacobs, who just was in a couple weeks ago, episode 398 or something like that, the founder of United Rentals, GXO, RXO, and now starting QXO. And he writes this book, How to Make a Few $1 Billion. And I get to sit across from him and understand that idea. For me, that's just a great privilege.
Let's talk about the 400th episode of Inside the Ice House. You had a conversation about New York City's history with Columbia University's eminent professor, Kenneth T. Jackson. Tell me, what stood out to you most about this interview?
It's important to understand the origin story of that interview. Here we are at 11 Wall Street, the New York Stock Exchange, And one night, we have neighbors in this neighborhood. We talk about them a lot. Federal Hall, they had a gathering to get ready for America's 250th birthday, which will be 2026. And they invited sort of folks from around the city who were in positions like me, public affairs types, to come and hear speakers, to hear in a more acute and precise way the history that a lot of us tell that you cover every day from our boardroom, as we say, George Washington was sworn in April 30th, 1789, and New York was the first capital. But here we are hearing from a historian like Ken Jackson tell in really fine detail how the Dutch settlement started in 1624, 400 years ago, how the wall actually came to be in Wall Street. And you look at Ken Jackson, he's sort of a towering figure, born in Memphis, Tennessee, served his country as an officer in the Air Force, got his PhD at the University of Chicago, and then came to Columbia to start teaching history to students, to generations of students. And the way Ken talked about New York's history, from the first sort of strategic view of the Dutch to see the value of the New York harbor, and then as the English took over and built the Erie Canal and its transit to Buffalo and the Great Lakes and Chicago before that, and how New York has burgeoned as as basically the globe's most important city and the world's financial capital. I was sitting in the audience at Federal Hall that night, and I said, Ken is talking about 400 years of history of this city, and we have a 400th episode coming up. I think there's some good alchemy if I could get Professor Jackson to come in the library and sit with me, and that's what we did.
What should viewers or listeners be on the lookout for? Any big names, locations coming up?
Oh, sure. Well, around this time of year, I start to think, I haven't been skiing this year, so I think I'll go find another place to ski. And last year, this is just my personal vacation time, but thanks to Ian and Ken Abel and the team, I carry around a little briefcase with my recording equipment. And so if I happen to be in an interesting place, I'm going to see if there's someone to talk to. It just makes the trip a little more interesting and adventurous. So I went out to Vail, Colorado a couple weeks ago, took the briefcase, sat down, and you think about Vail, one of the world's greatest ski areas, the flagship of Vail Resorts, NYSE ticker symbol MTN, another NYSE listed company. And I sat down with Beth Howard, who's the chief operating officer, did a deep dive on all things related to hosting 15 to 20,000 skiers and guests per day on slopes, getting the grooming ready, the snowmaking ready, being ready if any accidents happen, but also feed them and give them beverages that they can't resist, the whole entertainment package. So there's an episode coming up with Beth Howard. While I was also in Vail, I did an episode with Dr. Matt Preventure, who's a Naval Academy graduate and for a long time was the orthopedic surgeon to the Navy SEAL teams, 1, 3, 5, and 7, based in Coronado, California. Matt now runs the Stedman Institute in Vail, the preeminent place, Trinity, if your shoulder ever gets busted, if you get a knee or an ankle or anything orthopedic, you go to the Stedman Clinic and they fix you up using a lot of medical devices and equipment from NYSE listed companies. So that's Matt. And then coming up, bringing the show down to Boca Raton, Florida, Ken Griffin, the founder, CEO of Citadel, out in Las Vegas when we go to ICE Experience, going to be talking with the former Secretary of the Treasury, Larry Summers, and also Bill Farley, who was basically Farley Industries, the founder and creator of Black Knight, which ICE just acquired, and now owner of the Vegas Golden Knight hockey team, the Stanley Cup champions. So looking forward to that as well.
And you can watch my entire interview with Josh King by logging onto the New York Stock Exchange's YouTube page. Also, make sure to listen, review, and subscribe to the Inside the Ice House podcast on your favorite podcast platform. Josh King is on there every Monday for conversations with leaders, entrepreneurs, and visionaries. Scan the QR code here to listen to more recent podcasts. Now we're about 15 minutes out from Rayonier ringing the opening bell. One of the company's biggest initiatives is sustainable forestry. Here's what Rayonier is doing to succeed in that mission.
I'm Stephanie Patton. I'm a biometrician at Rayonier. A big part of sustainable forestry is replanting the trees that we cut down. We have to cut down trees because we all need forest products in our daily lives. With that, at Rayonier, we are typically planting many more trees than we harvest. Managing forests sustainably is more than just managing trees on the landscape. There's a lot of different things that are connected to the forest. So you can think of the forest grow on soils, so maintaining productive soils and healthy soils. And in those soils, we've also got water that drains through there. So forests are really important for managing high quality water. Another thing to consider is all of the diversity that we have of plants and animals. It's not all just pine trees, it's not all just, Douglas fir. We have a lot of different diversity even in our production forests. But along with that, we've got wetlands, and we have a cool mosaic of different kinds of forests next to one another. So with that, you kind of get the benefits of habitat for different animals, and plants, and insects. So that's how the sustainable forestry really goes beyond just the trees, but into the whole ecosystem. In forestry, there are certification bodies that ensure that you as a consumer are buying products that came from sustainable forests. That ensures that that wood was sustainably sourced. So the certifications, just kind of as a basis, they make sure that we as forest companies are continuing to be good stewards of the land, which is something that we've been doing for decades, but now we have this kind of recognition, and you as a consumer can feel confident that when you're buying these forest products, that you're buying something that's sustainable. You can support sustainable forestry by buying only sustainably sourced forest products, such as products labeled with SFI, FSC, or PEFC designation. Consider planting at least a couple trees whenever you cut one down, just like we do at Rayonier. And enjoy the forests around you responsibly by visiting them often, but never damaging habitats, and leave nothing but your footprints and memories behind. We have a big role to play in protecting the world's forest ecosystems, and so do you.
Now, shifting gears a little bit, AI has been generating plenty of buzz, and one company in particular made big news this week. OpenGov, which provides modern cloud software for cities, counties, state agencies, and special districts, has secured a majority investment from Cox Enterprises, valuing the company at $1.8 billion. Nearly 1,900 customers across 50 states use OpenGov's products, which range from budgeting and planning to procurement and asset management. Joining me now to talk more about it is Zach Bookman, OpenGov's co-founder and CEO. Zach, good morning.
Good morning. Thanks for having me, Trinity.
Absolutely. We're really excited to speak with you. And, I want to talk, what will this investment allow OpenGov to do with it that they couldn't do previously?
So we started this company 12 years ago. I was living in half a shipping container in Kabul, Afghanistan. I was an advisor to General McMaster, and we had a vision to bring the cloud to government. Many of these governments are using green screen, white screen, old legacy systems. People all over the country have too much experience with the problems that causes, and we thought, what if there's a better way? What if we can rebuild some of these systems, modernize governments, and help them be more transparent, effective, accountable, resilient, strategic? And so this investment is about doing more of the same and taking our cloud suites to every corner of the country so that we have a more effective and accountable government.
And as we're talking, we're getting images right now. Let me just explain to our viewers that we're seeing the executive team from Rayonier signing the Distinguished Guest Book with our colleague Chris Taylor there on the floor. We're going to get onto the floor in just a few moments. But to continue this conversation, Zach, OpenGov is valued at $1.8 billion. Can you take us through how the investment came together and how long did this process take?
We've been partnered with Cox Enterprises for the past 3 years. Started small, built the relationship on trust. They underwrote an acquisition of Cartograph Asset Management, the leader in enterprise asset management software. The city of Los Angeles, for instance, is getting ready for the Olympics using our software to maintain their streets and roads, lights, and so on. And we share mission, vision, values, and we want to go big and do a lot of good for our country. So that's what it's really all about, and I couldn't be more excited.
And let's take a step back for just a minute. Can you explain to our viewers how your company is helping different levels of government when it comes to cloud and AI specifically?
Sure. So we're the leader in cloud-based budgeting and planning software. We run the Office of Management and Budget. We're the leader in procurement software. We run the Department of Public Works with enterprise asset management software. So lots of the guts of government, from accounting and permitting and licensing, the Department of Building and Planning. We try to open up the back office, help these governments operate more efficiently, adapt to change, and strengthen public trust.
Now tell me more about the recent examples of how you're helping transform government. Which projects stand out most?
The entire state of West Virginia put its checkbook online, and so did the state of Idaho, so that residents can sift through literally every single dollar spent. And they've found all sorts of small issues and some large, as they're trying to bring transparency in and shine a light on government. The city of Orlando, Florida streamlined their procurement process by 80%, and Richmond, Virginia and Tampa, Florida are using dashboards to track performance metrics and report to the boards and communities on how they're doing. So these are just a few of literally hundreds and actually a couple thousand examples of how technology is making our governments more connected to not just each other, but their residents, their boards, and all that makes it possible for us to kind of live our lives and build businesses.
Now, as you know, AI is one of the biggest storylines on Wall Street. How will OpenGov continue to bolster its product offerings and reflect this?
We think it's real. We're investing very heavily in AI. We want to infuse it into every one of our product lines. For instance, if you're building a procurement in government, it's actually hard to buy things. The AI can help take templates and cut down the time it takes to actually get RFPs and RFQs and RFIs done. There are examples all over, from enterprise asset management. You got to track assets, and even trees are assets, and how you classify them and then maintain the billions of dollars of public infrastructure. So we're using AI in our products, and we're also training on it in how we build software and how we deploy and provide professional services to our nation's governments. We think it's real, and we think it's going to be a very exciting few years ahead.
Well, we look forward to more updates from you, Zach. Thank you for joining me.
Thanks for having us.
Now coming up, one ETF is offering investors a way to strategically invest in the music industry, and its CEO will join us in just a second to talk more about it. ETFs were in the spotlight also last fall, where the exchange hosted its annual ETF summit exploring the advancements and emerging trends across industries. Let's take a look. Now investors have access to ETFs that cover everything from popular sectors to more niche industries like sports betting. But one ETF in particular is hoping to strike a winning tune with investors. The MUSQ, or Music, Global Music Industry ETF, aims to provide exposure to the entire music ecosystem and track companies with a core business interest that is in the global music industry. The ETF holds more than 40 stocks, including industry giants like Sony and Spotify. Joining me now is David Schuhoff, founder and CEO of Music. David, good morning.
Good morning.
How are you? I have a tickle in my throat, so apologies for that. But I mean, you're here at the New York Stock Exchange, and let's start by telling viewers a little bit more about from where you sit, what your company does, and the significance behind it. I gave a little intro right there, but I'll let you elaborate.
So MUSQ, the MUSQ Global Music Industry ETF, tracks the performance of music companies around the world, basically in 5 different verticals: streaming, content and distribution, live music events and ticketing, equipment and technology, and satellite and radio. MUSQ is the first pure play music ETF, giving investors really a front row seat to capture all the growth and innovation in the music industry.
What made you start this? What was your motivation behind starting this company?
Well, I've been in the music industry, Trinity, for 25 years. I've been running public and private companies. I had a company called Evergreen for many years. We owned all the rights to J.J. Cale, Eric Clapton, Joe Cocker, a lot of Michael Jackson songs.
Wow.
So I've been investing in the space for a long time. And about a year and a half ago, I realized how many public companies there were in music. Live Nation, Spotify, Madison Square Garden, Sphere, Tencent, all the international companies, the K-pop companies, companies in Taiwan. And I said, wait a second, there needs to be a way for investors to conveniently invest in the music industry. So I created a completely liquid and portable product for them now to capture all global stocks around the world that are invested in music.
And what has been some of your most memorable or challenging moments that you overcame?
Well, look, designing a product and taking it to market's not so easy. It takes a couple of months to do that. We created a really beautiful index of songs of companies, and we back tested the product, and it's a very strong product. This stands up to all the other thematic ETFs. It's performing very well for the month, for the quarter. It tracks right alongside the S&P for the year, and so. Look, there's a lot of ETFs out there. You got $4 trillion of money. So
I'm sorry to cut you off, David. Actually, the bell waits for no one. We're going to tune into the opening bell, but we'll join you right back here in just a few moments. All right, there you have it. It is official. The U.S. equity markets are open. The market is open for trading. We're going to get down there in a little bit and talk to some of the traders. But to continue our conversation, David, let's talk more about how big tech holds the most weight when it comes to the more than 40 equities in your music ETF. What would you say are the main factors that contribute to this decision making when it comes to from where you sit?
So when I designed MUSQ, all the companies had to generate more than 50% of their revenues from music, or they had to be a top 5 player in streaming, content, live music events and ticketing, or equipment and tech. And so Apple, Amazon, and Google, while they don't generate 50% of their revenues, they're still number 2 is Apple, number 3 is YouTube Music, Google, and number 4 is Amazon. So I had to include them. However, they each carry caps of 7%. So none of the whole index is market cap weighted, and no single company can have a weight greater than 7%.
And Live Nation, which trades here under the ticker symbol LYV, they recently reported their quarterly earnings. What were your biggest takeaways from that?
Look, last year was a monster year for live music. They reported record revenues of 36%. Their revenues were up to $27 billion. Look, it was a huge year. You had the Eras Tour, you had Beyonce, you had Harry Styles, you had Elton John. 145 million tickets were sold across 50,000 events. So Live Nation is just crushing it. They doubled their output of shows for 2024. Look, it's funflation. It's revenge spending. Fans were spending over $1,000 a ticket for Taylor Swift. They were spending $500 a ticket to go see U2 at the Sphere in Vegas.
Yes.
And so people want to spend up for experiences, and Live Nation has just done an incredible job.
Well, thank you so much, David, for joining me today.
Great, thank you very much.
Now we'll be speaking to Rayonier CEO and its CFO momentarily. And like Rayonier, our parent company, ICE, is focused on sustainability. And recently, it also hosted the annual Climate and Capital Conference here at the NYSE. Here are some of the highlights.
It was fantastic to be here at New York Stock Exchange and be discussing sustainability. Who would have thought this would be possible 10 years ago?
There is a voluntary carbon market that is trying to form. So you're having all this demand pile up for people who want to do something good for the planet.
Adaptation, that's going to be an important element to our success in living in a world where we've impacted the natural environment so much.
We've really begun to arrive in terms of helping people make sense of the data. The problem is not the existence of data. We have more than enough data. We don't know what to do with the data.
Lots of people know something about climate change, but it's scattered, it's unorganized. Instead of having a little sustainability office as part of the company, it needs to pretty quickly become a systemic awareness.
95% of the world's emissions are not priced at an appropriate level to incentivize decarbonization.
We need to do more than just think about removing, but also using carbon credits as part of the net zero transition.
How do we get people and companies to compensate for the emissions that they're releasing into the atmosphere? Right now, it's free.
We have the tools available to address the market failures. They're just not being used by enough people.
Innovation is a key component of how we're going to solve this problem.
There is a desperate need for capital reallocation, particularly to Africa, that currently only attracts 2.5% of all green energy investments.
I care about institutions getting serious about doing this and finding the mechanisms and frameworks through which make it a part of everyday business, everyday life.
You have regulation around data and analytics, which are going to be important tools for all market participants to use in reaching their own goals.
What the planet really cares about is that there's fewer tons of CO2 in the atmosphere.
We certainly can work and aspire to a common future of a 1.5 degree.
We're not going to solve climate change. We're not going to go back to the way it was. But we can live well if we become resilient, if we pay attention, if we make relationships with each other. And so moving away from we're just going to solve it and it's going to be over to let's figure out how to live in this way, I think can be great.
Climate events are rising in frequency and severity. Increasingly, climate risk impacts investment risk. To help integrate these risks, the ICE Climate Transition Analytics tool generates analytics to identify, assess, and report climate factors in portfolios and loan books. Upload a portfolio to generate an array of climate analytics. Access carbon footprinting analysis, avoided emissions data, and Scope 3 emissions data. Conduct net zero analysis. Compare portfolio and benchmark pathways. Check portfolio's progress towards stated decarbonization targets. Conduct scenario alignment. Analyze portfolio implied temperature rise score and assess trajectory against chosen climate scenarios. Calculate temperature scores using the Science-Based Targets Initiative aligned approach. Access stranded assets data and analyze fossil fuel reserves footprint and country-level exposure. Generate and customize powerful reports, including TCFD-aligned reports that can help you meet your regulatory and stakeholder requirements. Access ICE's Climate Transition Analytics and more today.
All right, guys, we are on the trading floor right now. The markets are officially open. Looks like the Dow is up just about 100 points. But to talk more about the market, what we're seeing is Jay Woods, Chief Global Strategist at Freedom Capital. Good morning, Jay.
Good morning to you. Happy Leap Day.
Happy Leap Day.
Yes.
It is a happy Leap Day. So like I was saying, it looks like the Dow is up just slightly, like around 100 points. What are we looking at?
Yeah, no, we look like we're having a nice reaction to the PCE number. We were lacking some economic data this week. We're 90% through earnings season heading into this week. So there wasn't a lot the market was looking at. It was kind of slow. And then the PCE, which is the Fed's preferred inflationary number, came in right in line. And that's fantastic. So people have been kind of hating on this rally, not understanding why we've continued to hold on to these gains. Don't hate, just enjoy is what I always say. And today, good news was good news, and the market's, happy about the numbers.
Yeah, so, there's a lot of inflation reports coming out. We have PCE, CPI, the PPI. I mean, why does the PCI stand out? Or PEC. There's so many P's. PPI, PEC.
Too many acronyms, yes. But the PCE is the Fed's inflationary gauge that they prefer because it's more inclusionary. It's not excluding, it's including, please. It's where the CPI focuses too much much on maybe shelter. The PPI is the producer price index. So the PCI is more encompassing. So when they see that slowly decline, getting to their 2% year-over-year goal, that's at 2.8%, it's making progress. So their rate hikes have shown that inflation is still cooling, maybe not to the level some people want, where rate cuts will be coming, but this gets the rate cut narrative back on the table. But the thing that matters to us is the market. The market's making all-time new highs. So the market has been very favorable to what they've done, and this higher, longer for narrative can continue, unfortunately, because the market hasn't really given them the reaction that they say, okay, maybe we should cool it a little bit. Rates are at a good level right now, and the market's digesting that okay.
Let's talk more about those rates, right? We're seeing the next meeting. That's going to happen in about 3 weeks, right? Jerome Powell has repeatedly said that rate cuts in March are unlikely. Yeah. I mean, why do you think that is? What do you think we're anticipating for the rest of the year? When do you think rates will actually start to drop?
Yeah, that is the big question down here. March 20th is the next meeting, and no, they're not going to cut rates. Jay Powell has been very transparent about how he is going to go from meeting to meeting, data point at a time. The data points are mixed. The CPI, the PPI were a little hot. This number right in line. So maybe the next meeting would be May 1st. Maybe now the percentage chance, it was 25% coming into our little conversation, that will cut in May. A lot of talk, they want to get it done before June because it is an election year and they don't want to look political. And if they're cutting rates going into an election season, why would they be doing that? So we'll see. I think May could possibly happen, but definitely June if the inflationary numbers keep coming the way they are. They're trending slowly lower, and that's a good thing.
And CPI data is coming out mid-March.
Yep.
What should investors be looking out for? What can we anticipate?
Well, we anticipate volatility. I mean, of all the economic data points that come out, CPI has been the one that's been the most volatile as far as stock reaction goes. So the equity market does get a little jittery when that number comes out, because usually that is the indicator of what the PCE would do. And now, in this case, it wasn't. Jobless numbers, those are the other things that people have to watch closely. Jobless claims remain stable. We're at 3.7% unemployment number. That will be key to watch, because if it starts to tick up, maybe inflation, the Fed hikes have had a negative impact where the unemployment rate is rising, and that would also actually be a reason for them to cut rates if unemployment rises. But that's been stable, historically low. So right now, people hate to say this, but they're doing a good job. And that soft landing narrative, it's getting a little bumpier, but it's still on the table. And if rate cuts come a little later, it's not a bad thing.
And we're getting images right now of the executive team from Rayonier talking with their designated market maker at GTS, and we're going to speak to the executive team in just a few moments. But quickly, what do you think are the biggest sectors right now that are moving markets?
Well, that's funny that you asked. The Russell 2000, that is the indicator of all the small caps. That's what's moving the needle right now. It's up over 1% today. That's led by industrials, healthcare, and materials now breaking out. So we're seeing a broadening of this rally. There's sectors that don't make many headlines because they're not tech savvy, but this is what makes. These are the sectors that you want to see lead. So industrials, healthcare, materials, and the financials. Financials are doing well. Regional banks still lagging, but overall, we're seeing a broadening out of that rally, but there's stocks that don't make the big headlines, but I don't care. I see the Russell finally coming back. It's still 16% off an all-time high. The other indexes have made it. So maybe the Russell's finally catching up, and that's a good thing.
Great, Jay. Thank you so much. It was great to have you.
Thank you. Always great to be here.
All right. Now, as we're getting ready to talk with the executive team from Rayonier, we're actually going to take a look at how the company is building communities from the ground up.
I don't think there's anything more creative than to take an entire landscape and envision a new town, a whole place from the ground up. It's exhilarating. There's nothing like it. This was a story of grinding, dreaming it as one thing and doing it as another. Wildlight's a vision for a master planned community, a mix of uses over a big area. It started because there was a business purpose. We created this premise that said if we take lead over planning, over markets, over land use entitlements, over infrastructure, we can yield more value than some other strategy. I would say equally important and simultaneously, there was a community purpose. This company, almost 100 years old, has always been stewards over large environmental landscapes right around the country, around the world. And so there's an ethic and a responsibility for how you manage those things. We brought that same spirit to community development. And we said, look, we have an opportunity to create a higher standard, to be a model for others to emulate and do it in a way that really does give back to the community. So why start here? One is because of the market potential, and the other was because of the scale of our holdings here. We knew that if we started here, we had the potential to create value over that landscape for a long, long period of time. There's power in community, right? I mean, incredible power. You focus on education, and you realize if you do your community right, you're going to create a learning place where people actually learn because they lived in this place in a way that would be different if they lived somewhere else. I could do the same thing around health and community, technology, environment, outdoor recreation, friends, clubs, activities, all those things that create rich life. You can make a difference in people's lives if you create the place right and create an environment where all those things just flourish. That's what's happening here, and that's what makes me tick for sure.
No. I am joined now with Dave Nunes, Rayonier CEO, and Mark McHugh, the president of Rayonier. I mean, good morning, gentlemen. I mean, it's a great day, right? You just rang the opening bell, opened up the U.S. equity markets officially. How are you feeling?
Wonderful. We had a great investor day yesterday, and it's really fun to cap it off with the bell ringing.
And Mark, you were up there also. Around 100 million people tune in to see from around the world who is ringing the opening bell, and you were up there. How do you feel?
It's always a fantastic experience. It's really special to be here at the NYSE. Like Dave said, we had an investor day yesterday that we thought was very successful. So again, just overall great experience.
And Dave, you announced the company has big plans for 2024. I mean, Can you tell me what you're focused on and what you're looking forward to most?
Well, what we were really looking forward to was helping people understand our new land-based solutions business and a deeper dive into our real estate business, as well as highlighting our leadership transition. I'm going to be stepping down as CEO. Mark's going to be the new CEO, and so it was very fitting to be here for that.
I mean, how do you feel, Mark? I mean, especially coming into this company, joining a great team, obviously. I mean, what are you going to be focused on, and how are you feeling?
I mean, I've had the great fortune of being with this team for the better part of 10 years now, so it's a bit surreal. I've worked with this company for a long time. I've been the CFO for the last 9 years, had worked with the company as an investment banker for about 10 years prior to that. So it's just a fabulous experience, and I'm very much looking forward to the future.
And tell me, what was your thought process behind it when it came to selecting a new CEO?
Well, it was really when I hired Mark 10 years ago. I kind of knew he'd be my successor one day. And we'd worked together for much of the prior decade with my prior company. And so we've gone through a very detailed process of about 2 years of preparing for this. And so it's really wonderful to have an orderly leadership transition.
And Mark, is there any one specific goal that you have for this year?
I mean, really just to continue what's been a great trajectory under Dave's leadership. And, we've got a lot of exciting new growth opportunities for the company. But I think the overall goal is to have this be a seamless transition and to take this new leadership team forward.
Well, thank you so much, gentlemen, for joining me today. And I will let you go. Continue the celebration.
Thanks so much.
Thanks a lot.
Take care. All right, why don't we take a look at everybody just gathering behind us talking to the designated market makers. A lot of people don't know that this is an active trading floor. Between 1 to 200 traders are actively placing in orders now that the markets are officially open. And we're going to get into all of that and so much more. But first, I'm going to toss it to a video that my colleague Judy Shaw hosted. Let's take a look.
Judy, you had your investor day here at the New York Stock Exchange today, and during the presentation, you talked about your medium-term outlook and your long-term growth strategy. So tell me, what were some of the highlights?
Yeah, so it was a great morning here, 4 years after we held our pre-spin investor day here, so glad to be back on the exchange. These are exciting times in our industry and especially for Otis. We are a service-driven business model, customer-focused, with 71,000 colleagues around the globe providing elevator and escalator installation and maintenance. What we shared was growth. We have growth in our service business that's going to drive mid-single digit top line in service, and it's going to translate to double-digit EPS CAGR for the medium term. We get the ability to turn that into sharing that with our investors, and our investors are going to be able to basically receive between 24 and 28, $8 billion of capital back.
Okay. All right, so now shifting gears for a second. Thinking about some of the macro trends that are occurring in the world, tell me, what trends are you watching that our viewers may not be familiar with?
Well, I think your viewers will be familiar with urbanization, which is continuing in emerging markets throughout the world. The aging population, as people age, they need help with mobility. And when you think about elevators and escalators, it's not just commercial buildings or office buildings. More than half the buildings in the world are residential: apartments, condominiums, nursing homes, hospitals, medical office centers. So aging of the population drives demand. Urbanization, more people moving to cities in higher buildings, drives demand. And then digitalization across the board is just a mega trend that will continue to support an integrated, connected elevator and a great passenger experience.
All right, on that note, during today's presentation, you talked about modernization as a growth factor. Tell me, what is mod and why is it important for Otis and those who rely on elevators?
So we talk to the trend as modernization. You can think of it as refurbishment. But many elevators, there are a little over 21 million elevators in use somewhere in the world. Over 7 million of them have been in use for over 20 years and need a refresh. They need a technology refresh. They need new aesthetics. That's going to grow at a high single-digit plus CAGR over time. And it gives us the ability to keep those customers, to refresh their technology, to upgrade their elevators to make their buildings more attractive, and to make them more efficient, energy efficient, and to be connected in the modern era. So that's a big growth market for us. And what it does is it feeds our service portfolio. We maintain 2.3 million elevators every day around the world, and 2.3 billion people touch our product every day. So it's safe, it's reliable, and with these mods and upgrades, we keep it safe and reliable for another 20 years. The elevators don't leave the building, so as long as there's buildings and codes, we need to service them.
Mm-hmm. So you mentioned that you maintain 2.3 million elevators around the world. Tell me, what can you tell me about your service business?
Well, the service business is the most exciting, and I talk about our business model as being elegant and simple, except that we do it every day. We're making 200,000 service calls somewhere in the world. We keep elevators running, which means we keep people moving in airports, in buildings, in schools, in homes. We just keep the world moving. To do that, we have a maintenance contract, which is an annual maintenance contract we have where we do preventive maintenance and scheduled maintenance. We have a repair business that fixes things as they break, and then our modernization business as well. That's the business that's really grown, 7.7% last year top line growth. We've expanded margins 50 basis points in our service business for the past few years running. It's our growth business. Our portfolio is going to grow. We said today it's going to go from 2.3 million units to 2.8 million units by 2028, which then just generates tremendous EPS that we share with our investors.
All right. Well, Judy, always wonderful to talk with you. Thanks for joining me on Floor Talk today.
Thanks, Jude. Great to be here.
All right, I am joined now with Will Gooden, the director at the NYSE for both operations and the NYSE Institute. Good morning.
Good morning, Trinity. It's great to be with you on NYSE TV. And what an amazing morning. Great energy here on the trading floor, both with Rayonier on the opening bell and a great day already for U.S. markets.
I mean, it's always a great day, especially here on the floor. But, let's talk more about the NYSE Institute, because maybe our viewers are not as well versed as you and I are. So talk about it a little bit, why it's so significant.
Sure. Well, Trinity, as you know, the New York Stock Exchange has served as a vital bridge between public policy and commerce for over 231 years. And we launched the Institute back in 2021 based on feedback directly from our listed companies about the ever-increasing need to, one, promote the important role that public markets play in driving inclusive economic growth, and two, to help ensure the long-term competitiveness of U.S. capital markets. And that's why we've both been working in Washington, D.C. to make sure that our leaders hear that message, but it's also important for leaders and governments and capitals around the world to hear that message. And that's why in recent months, as you know, we've welcomed dozens of international leaders, presidents, prime ministers, members of their cabinets, regulators, legislators, and others to both share our unique global perspective and elevate the voice of our public companies. And although it's been 231 years, Trinity, believe it or not, when it comes to the great work at the NYSE Institute, we're just getting started.
And you know, you were just in Washington, D.C. to meet with those policymakers. Tell me about the trip. What were some of the biggest takeaways from that?
Sure. Well, we met with about half a dozen G7 and G20 country ambassadors to the United States. Many of their countries are actually home to companies that are listed here on the New York Stock Exchange. And the first takeaway is just how excited these governments and the people who they represent are about the innovation, the investment, and the jobs powered by companies listed here on the NYSE, and how excited they are to further expand and look for opportunities to collaborate between the public sector and the private sector to fuel even more growth. And the second takeaway, if I could, sorry, is just because I have to tell you, this is something when you're behind closed doors with these international leaders, it's a little awkward at first because they're talking about the power of the U.S. economy versus the power of their home economies. But there's a real admiration for just how impactful and powerful U.S. capital markets are. You know, they understand that we have the greatest companies in the world listed on our markets, home to the broadest base of investors and the deepest pool of liquidity. And it's important not just here, but for their economic growth at home too.
Amazing. And right now we're getting pictures of the Rayonier team, again, with their designated market maker here on the trading floor, getting probably more information about what they can expect today. But, you know, I want to talk about 2024. What are some of your biggest goals? What are you excited about? What are you looking forward to most? And tell our viewers how you really draw the parallel between capital markets and foreign policy.
Sure. I mean, well, we'll continue to welcome world leaders here at the New York Stock Exchange, Trinity, and we look forward to bringing insights from those visits directly to you and also to our beloved viewers on NYSE TV. But 2024 is a major year for global elections. You know, voters in more than 80 nations and territories are headed to the polls this year, representing about half of the world's GDP. So, of course, you know, with changes in governments, potentially, you can see updates to regulation, changes in economic incentives, new government spending programs, et cetera. So public company leaders are really focused on those outcomes. So here at the NYSE Institute, we're going to stay laser focused on bridging that gap between public policy and commerce, and also helping to ensure that current leaders and potentially future leaders around the world truly understand the important role that public markets play in driving inclusive economic growth.
Amazing. Well, thank you so much, Will, for joining me.
Great to be with you, Trinity.
All right. Actually, I think that just about wraps it up for our show today. So thank you all for tuning in. Again, I'm Trinity Chavez for the New York Stock Exchange, signing off.